Let's talk about the stock market risk for today as we see Apple right now trading near all-time highs. And I think this article sums it up perfectly. High stakes for investors as Fed tries curing inflation without causing a recession. And let's talk about what's at stake. Essentially a hard landing, which could include a bear market earnings recession, which ultimately would cause stocks to come crumbling lower. However, is that going to be the case for today? Are we going to see stocks like Apple and even IWM come a little bit lower? Right now in pre-market, we see the Russell 2000, the small caps, up $1.64 after Friday's candle, which was a very bearish candle. Now we're almost all the way back up towards those levels. We come over and take a look at NVIDIA this morning. NVIDIA in pre-market is up $1.73. We take a look at the dollar index this morning. We see the dollar index is currently up 8 cents. However, let's talk about something real quick. We see the markets are higher out here in pre-market with the SPY up $1.91. We look at the fear and greed index. We are just barely in the greedy territory. Is this about to swing back into neutral territory today? Or is the pendulum going to swing closer to extreme greed? Let me know your thoughts in the comment section down below. And if you're not yet subscribed to the channel, hit the subscribe button down below and give the video a big thumbs up. Now, when we look at the economic calendar for today, 8:30 a.m., we have the Empire State Manufacturing. But let's not forget, Jay Powell is going to be taking the podium once again. Is Jay Powell going to pour more fuel on this fire, causing the stock market to rally even higher? Or is he going to douse those flames and we're going to see the stocks come tumbling lower? Because let's not forget, we look at how prices unfolded on Friday. We had a big, strong move up, but then at the end of the day, we came crashing substantially lower. Now in pre-market, it appears like we're going to have a massive gap up higher this morning, unless the news at 8:30 sends stocks tumbling a little bit lower. We take a look at crude oil this morning, down 2 cents on the session, so basically a nothing burger there. Then we come over and we take a look at gold. What is gold doing right now? Gold is up $2.76. And I got to be honest with you, it most certainly looks like gold wants to make a run right back up here towards all-time highs. And the question is gold going to get up here with a small rejection back down and then ultimately break? Or is gold going to break on the first attempt up? Now, if gold is screaming up, why would that be? Is it because the market is pricing in aggressive rate cuts moving forward? And like I said before, I want to remind you guys, the Fed is not going to cut out their goodness of the heart. Every time the Fed has went on an aggressive rate cutting campaign, it has always ended with the stock market suffering a downturn, and don't think this time is going to be any different. Now, when we look at the diamonds, we saw the Dow on Friday finally joining the cool kids club, making another new all-time high, and in pre-market up $1.68. Is today going to be nothing more than another test, and then we're going to start to come a bit lower? On the 30-minute chart, you can see that nasty last 30 minutes of the day was coming in lower. We had the MACD indicator also starting to cross to the downside after being elevated. Now, if you look in pre-market, we are currently trading above value area high. So this is going to be very simple. If you trade the diamonds, just wait and see. Can we get back below 401.47? If the answer is yes, then that's when we look to target the point of control. Then we look to target all the way down here towards value area low. And let's not forget, on Friday, we had gaps out here in the markets. So just because we have a gap today does not guarantee that gap is going to get filled. Then as we look at the QQQs real quick, we have a Fibonacci retracement already pulled up. And we can see the Qs in pre-market are up $2 on the session. And the question is, are we going to make our way down towards a 50 or even 61.8 level? Because as we look over here to the right, that's exactly where we have a little bit of volume built out on the composite profile. If we can flush to the other side of the volume, look where the most amount of volume is traded, all the way down here at 441.07. If indeed stocks came crashing all the way down to there from the high, that would be a pullback of roughly 12.5%. That is quite substantial in my personal opinion. And I don't know this is going to be in the cards before the elections come out. Then we come over and we look at the 1 hour chart. What do we see? Well, MACD indicator kind of by the zero line. So not a lot to see on that chart. And then on the 30-minute chart, you see that nasty last 30-minute candle of the day. And as we're looking at this, MACD indicator near the zero line. But how do we want to play this? We had a minus development area up above us and we have rejected off of that. Are we going to start to come back down lower? And I want you guys to pay attention. On Friday, we formed another minus development area, and that really comes in right in here. And that's going to be somewhere in the ballpark of 493.59 down here to about 493.32. keep this on your radar. 1, this could act as a target location. 2, this could be an area where the market comes into, then starts to reject up and out of that area. The first time we come into it, we should get some type of reaction. However, remember, nothing is guaranteed in the markets. I want to make everybody aware, Apex 7 a massive 80% sale off all their valuation accounts, passed in as little as 1 day, and you can also get a 150K account for only $40. You get a 250K account for only $40, and you get a 300K account for only $40. So if you want to take advantage of this offer, use the link in the description box down below and use the promo code Mike at checkout. Now, as we come over and look at the weekly volume profile levels with the composite profile, what are we doing? Well, nothing more than just kind of chopping around near the weekly point of control. And as we start to look at this, where are going to be the key levels? Well, if we make it all the way up here to the upside above value area high, we do have a minus development area, which could cause the market to get a little bit of a knee-jerk reaction back down. But we're going to have the huge edges. If we start breaking above value area high, then we cannot hold it. We start coming back down. Then I want to look for the volume profile rotation on the way down. If we start breaking value area low and we start coming back up, then I want to look for the market to rotate up higher through the volume profile levels. Now, as we come over and look at the daily profiles, notice, what do we do? Well, we were able overnight to get where? Right above value area high from Friday. So what does that set up? That could set up a possible volume profile rotation on the way down. And look, we have a minus development area down here along with the untested point of control. Now, this minus development area, I'm going to go ahead and I'm going to be a little bit more selective with this one. And we're going to go ahead and mark it off anywhere from 20,480 up here to about 20,491. Look for this area to act as a target and a potential rejection point or some type of reaction the first time we come into there. Now, if we simply just come down here, then we reject back up. As we come back down the second or third time, I would anticipate it breaking, then looking for the point of control to come back and get tested. Now, the overnight volume profile levels are going to give us also additional targets and or entries into this market. Now, as we come over and look at the S&P 500, you can see Friday's candle, a shooting star type of candle, a very weak looking candle. And it's not uncommon to see the market come back, test the wicks, even overthrow them, and then ultimately start to come back lower. But we can also make the case that now we've had a 3-day balance period up here, meaning consolidation. And we're going to see, will this consolidation resolve itself to the downside or to the upside? As we look at the 1 hour chart for a little more clarity, what do we see? MACD indicator is clearly sloping down in terms of the peaks. We had the MACD peak out right around here. Price went up, made a new high. The MACD indicator failed to make a new high. Price goes up again, makes a new high. MACD indicator fails to make a new high. So that's showing us that there's a little bit of weakness out here in the markets in terms of momentum as we continue to push up higher. Now, we do have this minus development area that I'm watching at about 558.80 down here to about 558.00. This 1 could act as a target location, and 2, this could be an area where the first time we come into it, we get a little bit of a reaction, pop back up, and then ultimately we'll see if we come back down to break that level. Right now, we're trading near the point of control from Friday, and when we look, value area high comes in at 562.61. The point of control is at about 561.68, and value area low will be 558.98. Now, I like where this minus development area is in relations to value area low. Because guess what? If we break above value area high out here this morning, we start coming back lower, the point of control acts as target number 1. Target number 2, you could either pick up some of these distribution areas on the profile, or you could swing all the way down here towards value area low. And that's right near our minus development area where we can start to get a rejection back up. If we do, then we can target some of these distribution areas on the way up, then target point of control and value area high. It's a very easy if-then syntax. Then as we come over and look at the weekly volume profile levels for the S&P 500, keep in mind, we had a double top pattern form. However, that pattern is not validated unless we can come all the way down here, breaking the low at a price point of about 56.21. Now, when you look, we're kind of hovering right near this high volume area of the profile. We start to crack to the downside, just look right down here at the next high volume area, about 56.68. Anything below that, then watch out, because the first time we come into this minus development area, we can simply get a knee-jerk reaction right back up. And if you look, last night, where did we come down to? We came right to the edge of this minus development area. We reject up. So next time we come back down, we should get deeper into the minus development area, if not all the way down here towards the point of control at 56.44. Keep in mind, on the weekly profile, we are still above value area high. So as long as we're above it, what does that set up? That shuts up the path of least resistance is higher, and we're likely going to go higher. However, before we get to the point of control, let's not forget we do have a minus development area. I'm going to mark this one off a little bit tighter than what I was doing previously, and that's going to come in anywhere from the ballpark of 56.53 to about 56.55. So this one could act as a target location. If we start breaking it, then we can target the point of control. So if you're playing the rotation down on the weekly, watch this area for a potential rejection back up. We'll see how high we actually bounce if indeed we do. Then we come over and look at the daily profiles. We are not yet above value area high, nor have we been below value area low. We did come down and take out the point of control last night. Last night we opened up, boom, slapped it right back down, and then just grinded up all night long. Now this is where the overnight volume profile levels are going to give us a huge advantage in this market. If you notice, we have not been above value area high. We came very close. We had a high so far of 56.94.75. Value area high from Friday was 56.95.50. So we do not have a rotation up, but in the event that we break value area high, if the value area high from the overnight is lower, then as soon as we come back down, we'll use that as target number one, point of control, value area low. Then ultimately, I want to see if we can get down towards this minus development area from Friday's volume profile levels. But keep in mind, if we break value area high and we stay above it, there's no need to look for sell side targets to the downside. We are likely going to continue to go higher. So as another risk for the stock market is pay attention to the VIX. Right now in pre-market, the VIX is up 49 cents. Now it may not look like anything on the daily chart, but keep in mind, anytime we're near 52-week lows, we got to be on high alert that we could see a volatility spike at any moment. Then as we look, all the indices are still up across the board, even after the economic data that we just had released, and the VIX is still up. So with the VIX being up and all the indices being up, that is a warning sign that we need to pay attention to. If you're a bull in the market, you want to see the VIX starting to dwindle a little bit lower. Then as we look at the economic news that came out, the Empire State Manufacturing Index came in at minus 6.6, previously minus 6.0, forecasted 5.5. So another miss on economic data. And people think this is going to be a no landing or soft landing scenario. You need to think again. Now, before we come over and look at the overnight volume profile levels real quick, I want to remind you guys, we have the potential on the NASDAQ of this larger ABC pattern on the way down, which will bring us to about 20,086. And no, I'm not saying this pattern is going to make it all the way down to target out here today. This is something we want to watch. This will probably take a couple days to develop unless Jay Powell absolutely messes up the markets when he goes out there and speaks at 12 p.m. But this pattern is not validated unless we can break below the swing point right down here at about 20,330. We break below that. That opens the door to not only the ABC projection, but also that point of control that we talked about earlier on the weekly chart as well. Now, when we look at the overnight volume profile levels from a daily perspective, we have a rotation down. How do we know that? We are below value area high after being above it. So I want to be on the sell side of the market, which means we can now target value area low. Anything below that, I want to target that minus development area. But just know, if we start breaking below value area low and then we see strength come into the market and we start getting back above that level, then I want to play for the rotation up towards the point of control and then up towards value area high from the overnight. Anything above that, we can target right up here near these candle bodies from Friday, somewhere in the ballpark of about 20,710. Anything above that, I would want to push runners all the way up here to 20,882. Then as we dive down, look at the S&P 500, we can see the overnight volume profile levels. Value area high comes in at 5692.75. The point of control will come in at 5688.75, and value area low will come in at 5675.25. So how do I want to play this? Well, it is very, very simple. We've already been above value area high, so as long as we stay below it, I want to stay looking on the sell side of the market. I want to target down here towards 56.25. And actually, more importantly, when we come over and look at the daily chart, let's not forget we have a minus development area all the way down here. And I will not be the slightest bit surprised if we actually make it down towards 56.67. Not only would the futures markets be down, but it would fill the gaps for the S&P, the SPY ETF as well. So that's an area I do want to focus on. Anything below that, the minus development area comes into play, along with value area low out here from Friday at 56.48. Now, if you guys would like to learn how to profit from moving averages, watch this video right here.